Traders, welcome back to my YouTube channel. I hope you're doing well, and I really hope you've had a good week this week. It's been an absolute blast for the US dollar. A lot of strength in the market. Pound has been trash, unfortunately. Really not giving us any goods this week, but it is what it is. We can always rely on the dollar once we identify the strength or the weakness in some instances. Euro has also been showing signs of weakness this week, which is what it is. You know, I don't think Europe is representing, especially the start of June, but dollar is definitely doing its thing. Now, I just want to let you know, for the month of June, usually around the 1st to around the 15th, you're going to start seeing some random moves in the markets as the institutions and the banks algorithms reset itself every 6 months or so. So if you didn't know that and you're wondering why the markets are doing what they're doing, then that's probably the reason. From around the 15th again, they'll be alive and kicking, and we should start to see a really clear direction in the market. But be prepared. I think it's going to start to kick off, and I definitely can see the change in the markets since April up until around now. It's been super, super hot. And if you haven't capitalized yet, just make sure that you remain patient and disciplined, because I can promise you all the markets are going to provide the goods. So I'm just going to recap some trade ideas this week, something really exciting for you all. I'm going to go over 4 different entries that you could have taken this week. I'm going to be using the 4H time frame, of course, which is my favorite time frame. I'm going to share ideas with you, how you could have entered on the hourly time frame, the 1 minute time frame, the 30-minute time frame, and the 15-minute time frame. So buckle up. It's going to be a very, very enjoyable video. I'm not going to keep it too long. It is Friday. The weekend is coming, and I'm sure you guys don't want to be listening to me the whole weekend. So we're going to take a look at Euro USD today, USD JPY, Pound USD, and Euro USD. Just keep it in the back of your minds what I mentioned about dollar strength, Pound being absolutely trash, and Euro being weak. And you can see what I mean. Now, the first thing I want to highlight to you is, how do we identify the weakness or strength in a currency? Well, you can clearly see here from the start of the week, around the 1st or the 2nd, we can see that Aussie dollar has attempted to push up on multiple occasions here. Now, this is a 4H time frame, so we don't really take this time frame lightly. We really trust and believe in it because, in my opinion, it is the best time frame for traders. It's just my opinion. Okay, don't shoot the messenger. But as far as I'm concerned, it just breaks down everything nicely for traders' day. Every 4 hours, you get new information, and then you can gauge what you're doing from each 4H candle, I guess. Most of us will be only trading 2 per day. And for some who really trades around the clock, you'll be looking at around 3, I'll say it as at a maximum. But from the start of the week, how do we identify dollar strength without dollar strength even identifying it strong? Well, look, here on around the, 1st of June-ish, we can see the markets attempted to make new highs. What it did, it made new highs above the previous highs here. But what has happened? Well, firstly, we see multiple wick rejections. We can see prices attempting to push bullish, but kept failing. And then eventually what happened from this level, we had a nice bearish movement to the downside. This does not mean we can sell yet, but it does mean that there's strength stepping into the markets. Let's take a look at USD JPY. How do we validate that? Well, look here. Around the same period, the 1st, yen was pushing to the downside. It previously broke 109,800, which was a structural higher low in this movement to the upside. We see a really strong bullish move up and a correction. And then what happens? Price halts around 109.37. This is around the 1st of June again, same as Aussie dollar USD. Yen is not able to make new lows, meaning the dollar is showing signs of strength. This is like a brick wall where price cannot break through. So now we have that in the back of our mind. We have Aussie dollar USD not breaking. We have USD JPY not breaking. Let's take a look at Pound USD. So Pound USD, what do we have here? Well, as I said, the pound has been trashed this week, and it has been trashed for quite some time, to be honest with you. Excuse my French. But we can see here that the market tried to make new highs. Now it did. It broke out of 142.14, indicating that bullish sentiment here. But immediately what happened? Price rejected this level. It reversed out of this level, probably collecting some orders here. You probably can gather how many retail traders were probably selling at this level, because most people just sell support and resistance. But you can see sellers are jumping into the market, stop loss above some of these highs here. Could you imagine if your stop loss was above this high? Oof. Ooh la la. Okay, so we know what happens there. You get hunted, as you call it, and then what happens? The market comes down. But that's not what we're talking about today. We're talking about seeing the dollar strength creeping into the markets. So we see this breakout. On the first, we see this behavior in line with Aussie dollar USD and USD JPY. Let's take a look at the final pair, which is Euro USD. What do we see here again? Around the 1st of June, around 122.31. Now we've got 4 confluences of identifying potential dollar strength. Not confirmed, but definitely stepping into the markets, and we're able to identify it much clearer because we're failing to make new highs. Here again, we have price bursting through this level to around 22,600 here at the last high. And then what happens? Price immediately comes back in, indicating bearish sentiment. So now how do we trade this? Well, what you have to see is confirmation. You have to identify levels in the market where price is failing to break below or above, in line with the confluence you've gathered from the other 3 pairs or the 4 pairs in total. You don't need 4 pairs, 2 pairs is enough. But in this instance, we have 4 pairs. Now you're going to need to see market create a level. So here around 22.12, what do we see? We see price creating a support. Now, anybody who says this is not a support, I think you have a little bit more work to do in terms of your price action understanding. But this is definitely support, my friends. Okay. Now, once this level is broken, we have a confirmation. What you're looking for here in the markets to create is a level where price is failing to break below, in line with the sentiment, which in theory should be bearish based on dollar strength. You're looking for price to create that support to indicate that the bears are not fully in control of the market. And then you're looking for that confirmation of bears being in control. What that now creates for you is a structural high where price is failing to break above. It then creates a structural lower high after the break has been formed. And now when you have this formation, if you understand price action and technical analysis, then you understand that this formation is now a lower high. So once we have that information, what do we do? Well, listen, the rule is this. You cannot sell at a structural low, so you must always wait for price to do what? Exhaust as part of a trend. So once you have this break at this low, the evidence from the other 3 pairs, you know the dollar is strong, you know price is failing to make new highs, you have the break below structure, we're in a push phase, so you wait for the exhaustion. What can you do once the exhaustion happens? Well, you wait again for the wick rejections to form or a level to be created where price is failing to break above to show that the bears are not in control, rather the bulls are, the bulls are not in control, rather the bears are fully in control, adding confluence to USD strength. And then what can you do? You can scale down to an entry time frame. On this occasion, we're going to go down to the hourly time frame. And this is something you can choose to do. Use the hourly, 1 minute, 30 minute, 50 minute, it really doesn't matter. But remember what I said, remember that example that I had there? What we're looking for the market to do is create that structural high and lower high. So this was the lower high before the break, which you didn't see on the 4H, but obviously now that I've explained how it works, you should understand this is a lower high. Then you have that 4H break, which is the close below. So now what are you creating here? A structural high, lower, lower, low. You anticipate now the market to create a new lower high in line with the trend, and also added confluence here of dollar strength, plus a retest of a previous structure. So this is an intraday structure here. And what are you looking for the market to do? Create the multiple wick rejections and jump into the trade. Now, as I said, I'm teaching you concepts and principles here. You do not need to follow me. For anybody that is biased towards my way of thinking, then, well, no, bias is not the word, but anybody who is not in sync with the way I think and you have your own opinion on this, I'd politely ask you just to keep it to yourself. This content is designed for those that want to learn, and I'm just sharing my chain of thought here. You choose to heed it or you don't, okay? Humbly saying. Now, this is how you can enter this trade. First type of entry on your USD. Everything adds up. Failed to break highs, new lower high formed. Bearish behavior evident, bullish behavior as a correction of a downtrend, and now we have evidence here of multiple wick rejections. Why did we enter this trade? Well, you can see here in a consolidation, the market is moving sideways. Now, how I identify this structure from, again, an intraday perspective, but I'm not going to go into too much details about this is an intraday consolidation. So once I scale down to, let's say, the 5-minute time frame, what would I see? I'll see price moving sideways. What's the rule of thumb when it comes to sideways moving markets? The rule of thumb is that you wait for price to break structure. And once price breaks structure, what are you looking for next? You're looking for price to retest structure. And look here, this is your retest of structure. So was that trade valid based on a strong bearish break below this level on an hourly time frame? Absolutely it was. Now, again, you may not know that because you are not using your timeframes in sync with each other, but I can tell you now, this is a 100% valid trade to be taken on the hourly time frame, especially on the close of this hourly candle. Just as I illustrated on the 5-minute, it is your break and retest, but just from an intraday perspective. So we had the confluences, fell to break, new lower high, dollar strength, which is this big 4H bearish candle. We never sell the lows, we sell on the pullback retest. We look for evidence of bears back in the market again with the multiple wick rejections. We look for the momentum or your patterns, which is a break and retest, and you enter the trade. Here you have a beautiful 1-to-3 risk reward ratio trade. Now, granted, you might have been knocked out of this one break even. If you held it, it's completely fine. It doesn't matter. I'm not here for wins. I'm here for the process right now. And I think this was an absolutely gorgeous trade on Euro USD this week. Let's take a look at the next pair. So here we have pound USD. Now, what did we say about the pound? The pound has been trash. Dollar has been showing signs of strength. What are we looking for here? Well, we're looking for the market to create evidence of price failing to continue to push up, evidence of bearish strength, which is this strong bearish close below the structure. And then what can we do? Well, on this occasion, I'm going to scale down to the 1-minute time frame. So a little bit different from what I did with Euro USD. We looked at the 1-hour time frame, but this time we're going to take a look at the 1-minute time frame. Now, why is this important? Because what I'm trying to illustrate here is that price action is price action. Okay, what we're looking for the market to do is just create structure, and then once price creates structure and illustrates the behavior, then that's when we can jump into the trade. Now let me remove some of these candles because there's too much data here, and let's work with this. Now, this is not just about me scaling down to the 1 minute after price action has played out. You have to understand this. This is very, very important. We've already identified on the 4H time frame that price is failing to make new highs, so dollar strength. The pound has been weak all week. Then what are we looking for? We're looking for the momentum, which is the break below structure here. Once we get that information, then that's when we can scale down. So the 1-minute time frame does not differ from any of the other time frames here. It's all the same thing. What we're looking for the market to do is create structure that falls in line with our overall analysis. So here we have the 4-hour break close below structure. Here on the 1-minute time frame, we have the level where price is failing to make the new highs. I believe this is it. Yes, this is correct. This is the new highs here. And then what we're looking for the market to do is create a break below a significant level, which is this information here, which is this 4H candle. And let me just double check this. So we just mark a red and we go to the 4-hour and just double check. We're definitely on the right path here. And then what we're looking to do here is look for the patterns to support the dollar strength, the pound weakness, and the behavior. Now, this is not the cleanest of structures, but you'll always learn something new from every structure. So I might as well tell you now. Once we have the break close below, we have to wait for the pullback. The pullback is what creates the wick on the new 4H candle. Once you have a 4H candle close, what you anticipate is a continuation down on the next 4H candle. You must not be too quick to jump into the trades around these levels here because the new 4H candle, the current 4H candle needs to close first. Once the new 4H candle closes first, then what you will wait for, which is this information here, is for the market to create a wick, or you are looking for the market to break the low of the previous 4H candle, which initiates the momentum, and then you jump into the trade based on a pattern or whatever else it is. Here you have a break and retest on the 1 minute time frame. Let's just use a 13 pip stop loss here. And then you can take the trade like so. Okay. Now, what does this mean for you if you're trading like this? Well, this just simply means, where do we hit take profit in this one? This simply means a few things here. You identify the level where price is failing to break. You get the 4H momentum. You then get price creating the new break of the structural low, which is a new 4H open. The previous candle closed bearish. You anticipate the next candle to close bearish, which is this one here. And then you jump in on a pattern, or you jump in on a retest, whatever, doesn't matter. You jump in. Now look at the entry on this. How much did we take advantage of the next 4H candles move as prior to what I just said? Previous 4H closed bearish, next 4H closed bearish. Well, let's take a look. Back to the 4H time frame. What do we see here? Look at this. Failing to break closed below structure. Previous candle closed bearish, next candle should do what? Close bearish. Look where we enter this. We enter this at the start of the 4H smooth after the wicks form. Momentum is in play. And what do we anticipate? Well, we at least anticipate price to get back down to the major lows here. This is what we anticipate before we get a bounce. So when you go back to the 1 minute time frame, this is how your trade will look. Pretty special, right? And this is just the same thought process that you'll use for any other time frame. So I hope you enjoyed that one, and I thought I'd share that one with you. Let's take a look at the next pair. USD JPY. Let's go back to what we said at the beginning. Price failing to break structural lows. You're looking for a shift in momentum, which you can see here. We start the shift. You never buy in a push phase. You always wait for the exhaustion. Now, let's say price comes back into a consolidation area, and we're going to throw this spanner in the works here so that we avoid trades we should be avoiding and potentially look for trades that we can be taking. We're going to look for a trade here on the 30 minute this time, different to the previous, which was 1 minute and 1H. We'll look at 30 minute. What do we see? Well, towards the Tuesday, I believe it was, or Wednesday, we started to see strong bullish candles to the upside. We don't need to know why this is happening because we've already identified it from the start of the week. Failure to break on GU, failure to break on Euro USD, failure to break on USD JPY. We know that the dollar is strong. We just need price to take out a structural high. Once we have this structural high taken out, we have evidence of momentum and volume in the markets. Confidence is added as well. And what can we do? We can scale down to our 30-minute time frame and we can take a look at this. Now, this is a slightly different entry. So previously we looked at a retest. The 1 minute time frame, we looked at a trend trading opportunity here based on the 4H continuing bearish. And on this occasion, what can we look at here? Well, we can look at a breakout trade. Why? Well, we've already gathered information. Price is creating the lows where price is failing to break. We're also seeing now from an intraday perspective, bullish momentum stepping into the market. This is behavior for the day you trade. So I'm not concerned about the data to the left. Now, I'm not silly to be buying the market into this key level because that's where the reaction can happen. But once I start to see this bullish behavior with the structural high, higher low, higher low, what do I anticipate based on the trend? A new higher high. So in this instance, what can you do? Well, you can isolate the structures to the left where you believe price can react from. You can wait for price then to break above these key levels. Once you have this, you then bring the confidences together, which is dollar strength, the other two currency pairs or three currency pairs, pound USD, Aussie dollar USD, and Euro USD, that the market can continue pushing bullish. And what you wait for next is you wait for the market to pull back to a retest level. Again, if you don't know this is a retest level, you need to do some more work on your price action analysis here. But this is your retest. And once you get the retest, what can you do? You can place a trade on the close or the break of the previous high here with your stop loss below a key level. Let's just say 10 pips in this instance. And then you can go for your 1-to-3 risk reward ratio trade. Now, please don't ask me if I go for 1-to-3 every single time. It varies depending on structure, but for illustrative purposes, I will use 1-to-3. Now, when we scale down to, let's say, a 5-minute time frame, what can you see here? You see structure. You see price breaking a major key level. You see the break close above. You see the retest and what you anticipate in an uptrend, a higher low to then create a higher high. And as you can see here on the 30-minute time frame, which is our third example, we have another beautiful trade on USD JPY. So I hope you enjoyed that one. Let's take a look at our final pair, which is Aussie dollar USD. This is on the 4H time frame, and now we're going to take a look at the 15-minute time frame. Again, the exact same thing. We know dollar strengthening. We can see prices failing to break. What are we looking for here? Well, we're looking for price to break a key level in the market. Now, in this instance, we don't necessarily have the best break below a level here, but what you can do in this instance is once you gather the information, you can identify the momentum shift, which is this candle here. We never sell in the push phase, so we wait for the pullback. So we identify the sentiment here, which is structural high, lower high. When you get a lower high in a downtrend, what are you anticipating? You anticipate a new lower low. What can you wait for? Well, you can wait for price to start breaking structure and jump in based on an intraday trend, which I'm now going to illustrate to you on the 15-minute time frame. So here, we're on a 15-minute time frame. You can see now that the overall sentiment of the market has created a structural high, a new structural low, lower high, and now what do we have here? We have a new lower high. Now, this is a key level in the market where price can bounce off of, but the difference with this is when you plan to enter this trade on the 4H time frame, you are entering after the market has made a top wick, which creates bullish sentiment, which flips bearish, and you take it on the break of the previous higher low, which was the structural high or the last low, in anticipation that this candle will continue to close bullish back down to some of these structures. So what does that mean for you as a trader? Well, do you have to be majorly concerned about this level? Not necessarily, because once the market creates a structural high, the lower low should in theory form. So how can you take this trade? Well, you can look for price to break the lows here. And once price starts to break these lows, it doesn't matter where you enter. It can be the break of the previous wicks, the bodies. You can look for a close. It don't matter. Let's just take the close. You can then take the trade, something like this. Now, once price is this far away from this top wick, you don't need to be too concerned about it. More often than not, it's just manipulation, stop hunts, whatever it may be, before the market moves down. So I personally would just vouch for the key level itself, which I would draw in something like this to be safe rather than sorry. And then I'll place my stop loss above this key level. It doesn't have to be perfect. Let's just call it 20 pips here in this instance as a round number. Once you have the stop loss in place, what can you then do? You can then go for your 1 to 3 targets. Now, why does this work? Well, again, just one final note on this trade. Dollar is strengthening. Price is creating behavior that resembles dollar strength. We're always waiting for price to break key levels, pull back to create retest levels or structural levels, which is a downtrend, low, low, lower high. And then you look for the break on this in this instance. So we've taken a look at 4 potential trading ideas this week that you could have taken advantage of. We've also looked at behavior. We've also looked at 4 different entry styles, and we've also identified how we can place our stop loss and TPs in line with the structure of the market, especially on here. Once you take this trade, what are you waiting to identify? Well, you're at least waiting for price to come back to these structural lows for management purposes. And if the market is going to continue bearish, you expect a new lower low to be formed. Pretty simple, to be honest with you. And it's the same process over and over again. So I hope you thoroughly enjoyed that. If you did, smash that like button for me. Turn on your notifications. Subscribe if you're not subscribed. And just have a fantastic weekend. Until next time, traders, continue